important. Let's say you have your selling price per unit. Same thing, different way. Selling price per unit. How much is your selling price per unit? It's, let's say, same 100. Selling price per unit is 100, and from that you deduct the what? Variable cost per unit. For 1 unit, how much is the variable cost? Which is 20, right? I don't want to change the figures. So if you, from 1 unit of selling price, if you deduct the cost, variable cost for 1 unit, you get the contribution. Same thing, but per unit. For 1 unit, what is the contribution? From one unit of sale, how much your contribution is, right? And variable cost changes with each unit, right? And selling price also, sales also changes with each unit. So you have cost per unit and selling price per unit, so you can get the contribution per unit. And from the now you have the contribution for 1 unit, and you know how much is the number of units sold, or the output. Number of units sold, or you can say output, is how much? 100,000, right? So if you multiply your contribution per unit by the number of units sold or the output, you can get the total contribution, which is this one. Actually, this is the total contribution. Why we say total contribution? We got the total sales income, and we got the total variable cost for all the units that we sold. So we got the total contribution. But here we say take the same. How we take the same? By taking the contribution per unit we calculate first, and that we multiply by the number of units, right? 80 multiplied by 1000 unit we sold, so we have total contribution. So when it comes to total contribution, already your variable cost has been deducted. Already the variable cost has been deducted. So you have remaining what? Fixed cost. Fixed cost. So fixed cost, we know it is 50,000. It's the same, right? So if you take the 80,000 plus 80 minus 50 is 30,000, which is the net profit. Understood? So it is the same thing. So if you know this format, all the things you can learn. If you know this format, all the what you call concept relating to cost volume profit analysis can be learned. It's very easy then, right? If you understood this format, you can understand the remaining stuff. It's very simple actually. In cost volume profit analysis, we mainly classify our cost as, how do we classify our main cost? Mainly the cost is classified based on its behavior, which is as fixed and variable. Fixed cost mean the cost which does not change with the level of output or level of your quantity sold. It's the same. And variable cost changes with the your output, or the level of quantity that you sold, right? And we assume the variable cost per unit is same. It's 20. It doesn't change whether you sold 1000 or whether you have 10,000 units. It's the same, right? And selling price also per unit is same. Fixed cost doesn't change, and it's fixed, and it doesn't change with the output, right? So when you deduct the total variable cost from your total sales income, you have the total contribution, the remaining of the income after deducting the variable cost. Okay, we say total, we say contribution. You can get the same. How can you get the total contribution? From 1 unit of sales income, you deduct what is the cost per 1 unit. What is the variable cost per 1 unit? This 20. So you can get how much you get the contribution from one unit, and that you multiply by the number of units sold, you get the total contribution, which is same as here, right? Here you get per selling price per unit into number of unit, variable cost per unit into number of unit, so you get the total contribution. Here you first calculate what is the contribution for one unit, that you multiply by the number of unit, right? Same thing, and you get the contribution, and from that you deduct the fixed cost, right? Fixed cost is only what is remaining to deduct. Variable cost we have already deducted, so if you deduct the fixed cost you get the net profit, right? So this is the format, right? This is the thing. If you know this format, you can do the remaining things. Okay, now then we have to learn something called, now we have learned the contribution. What is contribution? I would say the remaining, or I can say residual of sales income after deducting the variable cost. Correct? No, the residual of the remaining, or the residual of sales income after deducting the variable cost, only the variable cost. Okay, only the variable cost, right? Only the variable cost. Then we have to learn a formula which is contribution sales ratio. Contribution sales ratio. What is contribution sales ratio? You have the contribution, no? You have the total contribution, so you put that on top, contribution. Okay, that you divide by, let's say, contribution you divide by what? The sales, total sales, right? Total contribution divided by total sales and multiply by 100. It's a ratio, so you have to multiply that by 100. Multiply that by 100. Understood? So same thing you can take. Now we took the total contribution, which is 80,000, and we took the total sales income, which is 100,000. So it is actually 80%. No, 100,000, 80,000 divided by sales income 100,000. It's actually if you take it's 0.8%, and if you convert it to percentage, it is 80%. Multiply by 100. 0.8 into 100 is 80%. Same thing you can do like this. You take the contribution per unit, contribution for one unit, that you divide by selling price per unit, selling price per unit, selling price per unit, and that you multiply by 100, that you multiply by what? 100. Same thing here, you take the individual figures, per unit figures, right? Here you take the total figures. Now if I show you what is the contribution per unit, it's 80. For one unit contribution is 80. One unit selling price is 100. So if you multiply, if you divide 80 by 100, you get 0.8, and if you convert it to percentage by multiplying 100, it is 80%. So this ratio is very, very important. Lot of things can be done using this contribution sales ratio, or some say it is cost volume profit ratio, right? But it's contribution sales ratio simply. How can you get it? Using the total numbers, total contribution divided by total sales income, multiply by 100. or contribution for 1 unit is how much, which we take by calculate by selling price minus variable cost per unit. We get the contribution per unit, and that divided by selling price per unit. Okay, so this ratio gives you like what is the relationship between the contribution and your sales income, right? uh, from your selling price or selling sales income, how much is your contribution? So from your sales income, contribution is 80%. So remaining 20 is the variable cost, because contribution is calculated by deducting the variable cost, right? So if your contribution is 80% from your sales income, your variable cost is 20% from your sales income. Yes, it's actually 20,000, which is 20%, right? So the main thing is the contribution and the contribution sales ratio, and you know how to calculate the net profit. You first get the contribution and then you deduct the fixed cost. Guys, understood? Any question? Now this is the format you have to learn now. Any questions up
Understood,
to
sir.
now? Understood?
No, sir. Yes,
Right.
sir.
Simple things, nothing complicated. Right. Now then you arrive at what? Contribution, and then you calculate something called contribution sales ratio, the relationship between the contribution and the sales, right? Now we are moving on to another item called another concept under this cost volume profit analysis, which is break even point. Break even point. What is break even point? Break even point means the point at which my net profit becomes zero. The point at which my net profit becomes zero. I would say the output, I would say the point at which the net profit becomes zero. My at point at which the net profit becomes zero. Or same thing we can say uh, the point at which the point at which now when you have zero net profit, what happens? uh, the total cost is equaling to the total income, right? Now your total if you are let's say you are having 100,000 income, and here in this case variable cost is 20, fixed cost is 50, so 70,000 total, and that is why you have a net profit of 30,000, no? So if you have, let's say, 50,000 variable cost and your fixed cost is also 50,000, so it becomes to 100,000 and it is equaling to 100,000. Then what happens? Your net profit is zero, right? Net profit is zero. So you can say the point at which total sales income equals to what? Total cost. Total cost means we can say fixed and variable, both. You have to deduct both to arrive at the profit, no? So if your profit is zero, net profit is zero, your total income should equal to the total cost. Or we can say, now guys, here if you see, if you want to get a net profit of zero, right, what happens? Your fixed cost doesn't change, no? It doesn't change, it's 50. So your total contribution also should be how much? If you want to get a net profit of zero at break even point, the net profit is zero. So how much is your total contribution then? How much should be your total contribution at the break even point, or when the net profit to be zero and fixed cost is same, it doesn't change, it's fixed 50,000, right? Even your output is zero, you have to pay this 50,000. So how much will be your contribution? How much should be your contribution? Total contribution. Any guesses? It should be how much? It should be 50,000, guys. If you have 50,000 as